Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 28, 2022. Let's take a look at most beaten down stocks. Look, we had a great day in Wall Street, but few stocks came tumbling down. First one is Teladoc. Teladoc came tumbling down after the quarterly earnings, and same story with 1-800-Flowers. Stock came tumbling down. Let's take a look and see if it's worth buying up here and go from there. And look, from a news perspective, we got Cathy Wood stock here. Teladoc came down 40% after slashing the forecast. And look, the company missed on the revenue big time, missed by 3.23 million, and 7 analysts downgraded the stock. That's a big time downgrade here. And then you got Align Technology, which is into teeth and dental, and this company came tumbling down. They also slashed the earnings, as you can see here. And then you got your ORLY Automotive, one of my favorite stock, came tumbling down. This is a very volatile stock around the earnings, but I think it's a great buy after this big drop here. And then you got Stanley Black & Decker here. Stock came tumbling down on the weak forecast, victim of inflation. And finally, we got 1-800-Flowers. This also came tumbling down here. I think this also missed the estimates here by 13 million. And there are two downgrades here. And look, Wall Street did very well today. Look at Dow Jones Industrial Average. Nicely went higher, and it's up 614 points. That's a big uptick here. Nasdaq went nicely here. Look at the uptick here, nice uptick. It went higher by 3.26%. That's a huge increase here. S&P 500 also did very well. Look, nice uptick here, and 2.47%. So all the major indices went very well. They did very well this today. So with that, let's jump in and look at the charts. From a charts perspective, look, Dow Jones Industrial Average doing nicely, nice uptick here. Same story with all the major indices here, S&P 500, and we got your Nasdaq, same story here. And then you got your Russell trying to go higher slowly. On the other hand, we got bonds. Bonds are still dropping, as you can see here. And interest rates, I think it's slightly jumped, but not too much. Crude oil is going higher slowly. And crude oil is right here going high slowly. And gold is kind of settling down. In these type of days, you could buy some gold when everything else is high. Gold typically does not do well. You could buy some gold. Even crude oil is okay to buy slowly here. So with that, let's jump in and look at ETFs. From an ETF perspective, look, we got S&P 500 at the top here. Nice volume. Look at the, I think it's the highest volume in the ETFs here. And look, it's still in the correction territory even after this big run. It's down 10% from 52-week high, still in the correction territory. As you can see here, it's down in 10-day, 5-day, 10-day, 20-day, all the way to 200-day moving average. But it crossed above its 5-day moving average, which is a good signal. This could be start of uptick here. We'll keep a close watch. But typically, when the market goes up so much like this, there may be some down days ahead, so we got to be careful here. And QQQ, as you can see here, did very well. Nice uptick here, 3.6% in a single day here. This is also, as you can see here, took on its 5-day moving average after this big run. And we got a few more. Look, all these ETF did very well. And look, XLE or energy also did very well here. Look, 3% uptick here. That's not too bad at all. XLE also crossed its 5-day SMA, as you can see here. And it's in a bullish territory with the above 200-day moving average. And then you got a few more here. Look, XLC. This is communication service. Because Meta went higher, Facebook went higher. Look, this went higher by 4%. That's a huge uptick here. I think that's why even XLK technology sector also went higher. All the tech stock did very well too. Even up here, XLC down big time. You could buy some XLC slowly. And even you could buy XLK here, which is technology. Look, from an RSI perspective, pretty much beaten down. Technology is beaten down here, and even XLC is also beaten down. You could buy both those names here. XLC is completely beaten down. It's a good one to buy at these levels. And as you can scan through here, we got semiconductors. Semiconductor did very well. Look, it's up 5%. The beaten down names have gone up nicely here. Look, semiconductors, nice big rally here. And then you got Bitcoin. Bitcoin also did very well here. Look, up 3.6%. That's also doing very well, but it's also beaten down. Then you got transportations went higher, but look, China is not participating right now. China is down. This is Chinese currency, FXC. Chinese currency down, which is not bad, which is actually good. All right, so with that, we will jump in and look at few stocks. From a stock perspective, look, top of the list here. This is sorted by beaten down names here. Look, we got here one day. Most beaten down stocks are at the top here. Top of the list is Teladoc here, TDOC. Look, it's down big time in one single day. It's down 40% here. And look, the EPS growth and revenue growth looks like it's okay for next year. Not too bad here. But I think they missed on the earnings. That's why stock came tumbling down. This company has got negative net margin. So fundamentally, it's still not making money. You got to be careful here. And look, insiders are selling slightly. Institutions are not doing much. So look, high short ratio. A lot of people are shorting this stock here. So as it goes down like this, I would be slowly buying this company because there is a very high chance for a short squeeze here. Given this company has got a high short ratio, you can expect some short squeeze type scenario here. So that's why I'll be slowly buying it as we go forward. It's a very big discount, as you can see here, came down so much, but fundamentally not a great company because of negative net margin, as you can see here. But looks like they got a cash in the balance sheet and free cash flow positive, and total debt is not too bad. There is some debt, but not too much. I think this company can at least recover from these levels and bounce slightly higher. Limelight is a different story. This company is historically it's not done well. It's a trading stock, as we call it. So look, 5 years just 5% up. It's just a trading stock. And then you got a few more here. Alnylam Technologies. This is a great company, but look, it came tumbling down. Once in a while, this stock comes tumbling down. Look, it's done good in 5-year time frame, and this company makes money. Look, net margin positive. Companies like this, it's good to buy. Look at the overall score here, 92. I would be a buyer of Alnylam Technologies here. And then you got 1-800-Flowers. This company, I think it's a little bit downturn of late. But look, it's a net margin barely positive, 4% here. Sales growth is 8% in the last 1 year. That's not too bad. Gross margin is also pretty healthy here. And it's also coming down because look, there's a high short ratio here. And I think they don't have too much float. Shares outstanding are very less here. Float is less. So you could take advantage and buy some FLWS as a contrarian here. And this also, as you can see here, it's got pretty okay, decent overall score here, 74. And it's got nice expectation for next year. So you could slowly buy 1-800-Flowers after this huge drop off here. And then we got a few more here. We got VIRT and ORLY. As you can scan through here, I like ORLY better. This has got a nice positive net margin, as you can see here, and nice sales growth, 9%. And as you scan through here, ORLY has got a nice 68 overall score. You could buy some ORLY here, and even VIRT, not too bad. This also has got nice net margin positive company. Little bit high debt, as you can see here, but it's got nice 71 overall score. Looks like for expectation for next year from earnings and revenue perspective, it's negative. That's why probably ORLY is a better bet here. And you got a few more as you can scan through here. Keep watching the next year growth year, earnings and revenue growth, and also keep watching the net margin. I love the net margin positive companies these days here. And you could also look at the debt and free cash flow. I also like free cash flow positive companies. Many of these are free cash flow negative, with the exception of maybe one right here, Peabody Energy. Looks like this has got free cash positive here, and net margin also positive. You could take a look at such names here. And you could even take a look at Stanley Black & Deckers. It's also a good one to buy at these levels. Companies got positive net margin, as you can see here. And I would not buy the stocks with a high RSI here. Keep a watch on RSI here. So if it is too high, I would wait. But I think all these stocks have got low RSI, with the exception of VERU here. VERU is a little bit higher RSI for me. I would probably skip on that one here. All right, I also like SRCL Stericycle. This is also a wild trader, as many of you might be knowing. Right now it's down big time, and this one has not done well. It's a trading stock. Look, 5 years also it's a negative 40%. So you got to be careful with such names here. All right, let's look at a few more names here. We got a few more names. Let's go to next year. Yep, we got a few more names. Keep watching one day here, all down big time. And keep watching the net margin positive for net margin positive companies. You could buy such companies. Look, we got Comcast here. Comcast also came down, as you can see here. This is pretty healthy company. It's not done great. Look, it's 5 year just 16%. I'm looking for a little better performance overall. So with that, you could look at Domino's here. Domino's is a good player, but came tumbling down. You could buy some Domino's here. It's a very healthy company. Look, 12% net margin. You could buy this company here. And we got a few more here. I like the ones with high overall score here. We got one more right here with high overall score, ADMA, just a $1 stock. And this company has got a negative net margin. I would not probably buy this one up here. Instead, I would go for better names here. We got few with nice net margin. Look, we got Amgen here. Nice 23% net margin. Amgen has not made too much money for investors in the past. Just 69% in the last 5 years. But it's a good candidate here. And we got KBR here. KBR has done nice money for investors here. You could take a look at this company also here. And this has got high PE ratio right here, but price to sales ratio is just 1. And we got Bosch Health. It's also a good company here. You could take a look at Bosch Health. I think these guys are splitting the company. You could look at this one also here. And RSI perspective 31 just sold off here. And we got DDD 3D Systems here, which is a 3D printing play. You could take a look at that one also here. This is also beaten down, as you can see here, down 4% today. This one has not made too much money for investors. Even in 5 years, it's negative 26%. All right, so let's keep a watch on the positive net margin companies. Those are the ones you can slowly start investing and go from there. We got ORI here, positive net margin, and Church and Dwight also works here. It's a steady Eddie type company here. You could buy this one also. All right, let's look at a few more here and go from there. Look, we got all these names here down big time today. Look, one day it's down, and keep watch on net margin positive companies. We got a couple of them here. TradeWeb, which is one of my favorite stock here. You could buy this one also up here. Only thing is it's got high PS ratio, so you got to be careful. A little bit pricey from a valuation perspective. And then we got a few more here with the positive net margin. Look, we got NVST here, positive net margin. And this company also done pretty okay in last 2 years or so. As you can see here, 118%. And right now RSI 26 tells you stock is sold off. You could slowly buy some. And we got a few more with the nice net margin here. We got Liberty as well as MRVI. Look, MRVA has got nice margin here. You could take a look at this one also. And even Liberty also works here. You could buy that one too here. Nice net margin, and overall score is also pretty okay here. All right, so we got few more here. We got few with the nice net margin here. Look, we got AFLAC, which is a good one here. You could take a look at AFLAC also here. Overall score 85, which is great. And we got one more here, ACGL. This is also positive net margin company and nice overall score. You could take a look at this one also. And we got one more with nice overall score here, New York NYCB. Actually the one before it. So we could let's see which one is this. Yeah, Huntington. Yeah, you could buy some Huntington here. Nice overall score. You could take a look at that one also here and go from there. All right, so with that, what we'll do is we'll look at two companies in a little more detail and see if it's worth buying. Look, first one is Teladoc here. Teladoc is a little bit different story. Stock has been dropping off big time. Look, it's down all the way down here, and right now momentum is down after the drop, and volatility kicked off much higher. Look, IV percentile is 90. You can even sell some put option, make some good money here. And look, on the balance volume is down, and looks like smart money went in. I know Cathy Wood went bunch of stock today, even after the big drop. So did some hedge fund managers. So what you could do is you could take advantage. If you're a contrarian, you could buy some TDOC here. This will have some bounce from these levels. I think you could follow Cathy Wood and these money hedge fund managers and buy some for a quick swing trading type play. I could see some bounce from these levels here. All right, so as we look through Teladoc here, look, they're not doing great from an earnings perspective. Company is still losing money, but in 2021 they increased slightly. They lost less money, as you can see here. Sales perspective, top line perspective, this company is doing well. Teladoc seems to be doing okay here, but they're diluting their share count, as you can see here. Shares outstanding is growing, which is not a good story, but looks like they're trying to keep in pace with the revenue growth here. But still, I want this to be profitable first, and I think they should stop the dilution. Look, operating margin perspective, there is some improvement. That's a good story. Net margin also, there is improvement. That's also a good story. And the debt is coming down. That's also good. This company is really, controlling its bottom line properly, which is good, and growing its top line. That's also good. But they should give more importance to EPS growth here, and also they should stop diluting. That's why overall stock is okay. This company is okay, but huge big drop here could be a good buying opportunity. You could wait for a good swing trading type opportunity here and buy some Teladoc. All right, from an earnings history perspective, look, Teladoc missed on the revenue side, missed by 3.28 million, and they're not making money, as you can see here. They're not making too much money. Typically what analysts do is they will compare this Q1 with the previous Q1 here. If we compare these two, they lost less money, as you can see here. They lost less money in this year Q1, and they also missed, as you can see here. They missed back here, but they did some beat in the current quarter, but they missed on the revenue. That's why company came tumbling down. Overall, from a revenue perspective, I think company is doing pretty okay, not too bad. It's improving, as you can see here. Nice year-over-year growth, not too bad. But it's not a predictable company. They miss sometimes. Look, they missed a couple times right here. Look, they missed a couple times sequentially. And this time they did okay on the earnings, but they missed on the revenue. That's why stock came tumbling down. All right, Teladoc from a snapshot perspective, look, analysts are saying buy, but this got changed after the 4 downgrades that we had, or actually 7 downgrades. I think this will be, analysts probably hold rating tomorrow or maybe sell. And look, company has not done well. Look at the performance here. They're down all the way to 1 year, 2 year, all the way down here. 5 year they made some money, but right now they're down. Company doing very well from a sales perspective. $2 billion sales, not too bad, and they've done great from a sales perspective in 5 year, 1 year, and quarter over quarter. Top line is doing pretty well here. But the issue is with the bottom line here. Look, operating margin and net margin negative here. Company is still losing ton of money, as you can see here. Insiders are selling slightly. That's also not great. There is a high short ratio here. Short sellers are breathing down its neck, and right now it's below its all the moving averages, as you can see here. From a put call ratio perspective, a lot of people are buying put options to make some money as the stock falls down. That's why there's a high put call ratio and also high short interest for the stock here. And they're down below their Bollinger Band, both 50 and 20-day band here. And from an analyst, from a Morningstar perspective, this gets a good A grade in growth and profitability, but financial health is C grade. Overall score is 53. So you got to be a little bit careful here. Look at the max drawdown in 1 year and max drawdown in 5 year. Their max drawdown is really super high here, so you got to be careful. But after this huge big drop, you could, as a contrarian, you could start a small position and wait for an uptick here. All right, now let's look at one more company here, 1-800-Flowers. This one is a little bit better story, as you can see here. This company is growing its earnings nicely, growing its sales nicely, top line is nice. They're keeping the share count constant, and they're increasing their operating margin. Net margin is increasing, and their debt is a little bit rising. This is one concern here. Otherwise, they're doing pretty okay here. I think in the recent quarter, margin came slightly down, but overall this company seems to be doing pretty well. All right, now let's look at the earnings history here. Look, from an earnings perspective, this company missed on the EPS, missed on the revenue. It's both are missing here. That's why it did not do well. And they also did the same thing last quarter. They missed on the EPS as well as the earnings. So the moment Wall Street sees a sequence here, sees a trend, they will go ballast, they will go really bearish on the stock here. That's what went on here. So 2 times you missed the Wall Street estimates, you are basically in the punishment zone here. So it will take maybe a quarter or so to come up here, but it's a good buy. Fundamentally good company, but right now it's in trouble. I think this company will do well. Look, overall revenue increase perspective, they're done nicely in the past. Look, nice improvement here. Right now there is some temporary pressure on the company. That's why it came tumbling down here. All right. From a snapshot perspective, look, 1-800-Flowers, and it's a strong buy. Probably this will change tomorrow, and it's down. Look, it's down in all the way to 1 year, and it's down in 2 year also. So that's why it's right now it's not in a great shape. Short-term trouble. Nice $2 billion sales, not too bad. There is a sales growth in 1 year and 5 year, and quarter over quarter top line is growing nicely, and this company is also profitable, as you can see here. And look, institutions are slightly selling, not too bad here, and stock is down below the moving averages pretty much. Look at the put call ratio. A lot of people are buying put options, expecting stock to go further down, and this also has got a nice high short ratio. Short squeezers are breathing down its neck. This is also a good candidate for a swing trading opportunity. This can crush these short sellers as it slowly makes its way higher. All right, overall score is pretty decent here. Look, 74, and they got a nice B grade in growth and profitability and D grade in financial health. All right, so with that, let's look at the chart. chart, look, 1-800 flowers, it's not doing great. Down here. I think there is a chance this can go higher from here. Right now chart is ugly. Look, everything is pointing down here. So chart is ugly. Smart money is flowing into the stock. Look, after the drop, smart money is now flowing into the stock. People are really buying because it's fundamentally okay company. From a numbers perspective, I think this will bounce back as economy improves. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.